So hi, everybody. I'm Bill Moore, and I have the great pleasure of introducing to you Tom Basso. Tom has a list of accomplishments that's far too long for us to go into here today, but I think that as a group of people that are learning to trade, there couldn't be a better person to sit and have a talk here today. So this is Tom, and Tom, I would love for you to tell our guys, about your journey, about how you got, to do what you got to do, and why and how, and a few of those little details. I'm sure they will appreciate it to no end.
Well, thanks, Bill, and good to be here with you. I always enjoy just talking trading in general or whatever and helping people. I probably had a little bit of an unusual career in terms of getting to the money management side of things. I started out as a chemistry nerd in high school and got a lot of scholarships to Clarkson University up in northern New York and became a chemical engineer. And went out and designed chemical plants in St. Louis for about 7 or 8 years. But in the process of doing that, was salting away money just to protect myself, because back in the 70s, when I came out of school, we had these boom and bust periods in the economy. And when you had a bust, a recession, engineers were laid off. And I thought I better save some money just in case I need to, go without a salary for a little while I'm looking for a new job. So started doing that. One thing led to another, got it big enough. I said, I got to do something more than putting it in a CD or whatever. I got to look at stocks. And so I started out trading stocks. And fortunately, there were some very good periods in the up markets through the mid 70s. So I caught that just completely lucky, not smart on my part. And I didn't learn much by it because future bear markets would catch me. But I knew the markets went up and down. I had looked at the 73, 74 bear market when I came out of school, and I knew that there was a lot of risk. And so here I am building up my portfolio. It's getting bigger, along with another guy and several other chemical engineers that were at our company. We had an investment club going. Only the other guy and myself were doing all the work. They weren't coming up with any ideas, not discussing anything. So we are essentially managing the money. And eventually more people joined the group because it was doing some successful things. And then we found a third guy who was also a chemical engineer, also at the same company. And he was managing money on part-time basis at night. And so we all got together one day at a lunch and said, hey, why don't we just do a company and register and do everything legitimately, and we'll just run it part-time and see what happens. Well, one thing led to another. All of a sudden we're managing $7 million under management, and I'm doing the math. And I said, guys, I realize you guys have kids and wives and all this stuff. I'm the most flexible of the three of us. Why don't you finance me going out full-time, and I will go ahead and raise enough capital, get you guys out of your chemical engineering careers and into money management. And they were both kind of like, okay, I guess that sounds like a good plan. Off we went. Pretty soon we're at about 17 million, and I've got both my partners out, and we grew to 80 million. And one thing led to another. I sold off my share of the company and went and formed Trendstat Capital, which I could control without partners. And that simplified my life greatly and made I got more into futures. I started trading at one point up to 80 different futures markets. Ran out of capacity there because we had gone north of 100 million under management at Trendstat, and I started looking at FX and added another $500 million in FX money. And then that was the sort of peak in the late 90s. By 2003, the FX business had just imploded. There wasn't much left. A lot of the bigger FX guys like myself they either disappeared or they lost up to billions of dollars in terms of asset under management when the euro came in. And so I looked around and I said, I'm doing all these regulations. I'm paying $100,000 a year for accounting and legal work, and why am I doing this? I don't need the money. I'll just retire. So I shut the firm down and have enjoyed almost 20 years now in retirement and having a great time.
Well, that's great. That's an awesome story. I'm sure a lot of people would love to to follow in those footsteps. But tell me about, okay, so you were talking about futures and FX. Why did you choose futures to start with as an asset class, or I mean, what was?
There's a
Tell
very
me about
logical
asset classes and why you choose them. Yeah.
Yeah, why I chose it was this. It was really plain simple. If you have a stock oriented buy and hold, or even trade long only and not buy and hold, you are going to have a rough time in your business during a bear market. And remember that I had come out of school and had watched all these chemical companies I was looking at interviewing with, watching them in 73 lose 50 cents on the dollar in their stock prices. And I'm wondering, wow, am I making a mistake coming out into the chemical engineering world and looking at all these companies getting killed in the stock market and the economy looks terrible and blah, blah, blah. I might need, protection. So I'm looking at my money management business, and we were long only and then go to cash. And I started up some timing programs with mutual funds back in those years, because at least I could help protect the portfolio against a devastating bear market and, maybe preserve some of the assets in a 50 cents on a dollar bear market. And that worked it worked to an extent, but it wasn't the final answer. When I looked out there at what else could you do that could produce profits during a period when the stock market was getting killed, I immediately came upon futures, because I could go long or short with ease, and I could trade things like corn or things like oil or things like bond instruments or foreign currencies. And they had nothing almost whatsoever to do with the stock market. So now you have a completely separate asset. You have two directions you can trade it. That felt a whole lot more comfortable to me in terms of what you're doing in a business, so that I could sustain the business through downturns in the stock market. So I started offering a track record there. I got a few takers, build the business from ground up, just like I did the stock side. And I'd go out and visit clients and talk about it. And I've always had a math background from the engineering days. So you could put me in front of some difficult due diligence committees. And I still remember like the 10-person Merrill Lynch committee that ended up giving us 100 million at one point.
Wow.
You get asked a lot of interesting questions.
And
But I was capable of answering them all. So we ended up doing pretty well. I ended up finally reaching a point where I kind of had done everything I ever wanted to do. I made a lot more money than a chemical engineer would have made in my career. And it got to the point where I'm thinking, what other challenges do I have out there? Wouldn't it be a lot more fun to do some stuff in retirement and create my own challenges there for my own portfolio and get rid of all the basically hassle of running a business in today's world, with government regulations, clients calling you, employees wanting days off and vacation days and everything else. My life's simple now. It's just myself, my wife, and 4 portfolios, and I have no regulations, and I have no need to deal with all the audits and the
life is good, huh?
Yeah, life's great. I'm enjoying.
I have one more asset class question. Have you ever traded options?
I have minimally. What I find with options is I'm a big fan of automation from my engineering days. And if I can take something, simplify it down to a program code, and then let a computer do the heavy number crunching for me, and I just hit the button and transmit the orders, or something simple where a human being doesn't have to strain too much, I'm basically lazy and I'll let the computer do it. When you get into options, you get into a lot of very interesting math. And I can handle that part of it, but it's not as easy to find good data that's real-time data coming in that you can do simulations on, that you can then completely automate some kind of an option trading strategy that really doesn't require more hands-on. I find most option traders get up in the morning, they have a routine, the market's open, they execute orders, but they're manually doing it. And I don't want to tie myself down in retirement. I want to be able to go out on the golf course or take a vacation or do other things. And options trading just doesn't lend itself to that as easily as, say, futures trading or stock trading.
Yeah, yeah, I concur. I concur. I've done a lot of work for companies that are trading options. A lot of the mathematical side. As you know, I've got an education in math and physics myself. That's the background I come from, is actually building systems, as opposed to being the frontline guy trading.
I'm not saying you can't do it. I'm just saying it's pretty
No,
difficult.
I know. I understand. I understand. It's a puzzle, and especially in retirement, who wants to do that, right?
Yeah, I don't want to do it.
So let me ask you one more question. If you were going to turn to, a niece or a nephew or somebody who was just wanting to get into trading, and you were going to give them, that first piece of life advice about trading, what would that be?
Put on your, in Spanish, paciencia, patience. It's going to be a long journey. Getting rich quick is not what your goal is. Financial independence could be, but it's likely to come from lots of years of making mistakes and learning and getting better and adding capital and diversifying your portfolio and diversifying your techniques, maybe diversifying your time, orientation, maybe having some shorter term stuff and some very long-term stuff. A lot of people talk about that, but I mean, right now you look at where I've arrived after 50 years of trading, and admittedly had done well and got a little bit bigger portfolio than a lot of people would, but I've got roughly 60 positions across 30 different sector ETF markets, exchange traded funds that would be. And then I've got 26 commodity and currency markets that I trade, 2 directions. I do have an option program that I do once a week, and I have to do it manually, and that sells credit spreads, and I'd use that for sideways periods of markets. And I trade crypto futures, 2 of them, and I trade some stock indices on a shorter term basis. And I even day trade if I'm sitting at the desk all day. I haven't done that in about a week or 2 because I've been running around a lot lately with the new house. But I'd say that's where you're headed, and don't expect to get there tomorrow. And when you get all done with all that, you could have a steadier return. It's a great way to manage your money instead of having brokers manage it while you're doing whatever you do in your day job. But I don't think traders should think about all of a sudden starting out with like $5,000 and you're going to retire next year. That's not going to happen. If you do it, it would be completely lucky beyond belief, and you will have taken on way too much risk, and good luck trying to hold on to that $1 million.
Yeah. I have so many other questions that I would love to answer or to ask you to get your opinions on, but I think I would like to get off of this part of the call, and so that we can regroup and then do a talk about trading psychology, where I know you are a master. So thank you so much about your inputs on this portion, Tom, and thank you. I'm sure our students are saying thank you right now while we're doing this.
Yeah, you're welcome, Bill. It's been fun.
Thanks so much. Okay, so let's hop off, and we'll reconvene in a few minutes and do a trading psychology talk.
Super.